Alrighty, kicking off my YouTube career here. Got a lot of stuff planned for this channel. I have stock market stuff, cryptocurrency stuff, programming, mathematics, all the stuffs, all that stuff. That's kind of what I want this channel to be. All those things sort of wrapped into one. And I hope it becomes obvious why as the channel progresses. But anyway, I want to start off with just kind of an overview on my take of trading stocks and cryptocurrencies, and I guess, any other liquid assets. I tend to think in terms of probabilities, and I like to, as much as I can, boil things down into simple mathematical models, because I think if you can do that, if you can take something, a business or a system, and you can boil it down to a simple mathematical model, you can really do a whole lot with it. You can make predictions, you can tweak things, and you can really do a lot. But anyway, it's neither here nor there. Let's start off with a simple thought experiment. I think that's the best way to get my message across here. So let's just say I am a complete noob to the stock market. I don't know anything. I've never seen a price chart before. I don't know what earnings is. I've never heard of EPS or a dividend or anything. Don't know anything about the stock market. And you were just to present me with these random ticker symbols and ask me to predict the next 1% move in the stock. So in other words, give me a ticker symbol. Is the stock going to go up by 1%? Or is it going to go down by 1%? What is the next 1% move of the stock? So it could potentially do both, but what I'm concerned with is what is the first move going to be? It's going to be up or down. And, me not knowing anything, I would just be arbitrarily guessing. And I can either be right or I can be wrong. And there's only two outcomes. The stock eventually, assuming that something crazy doesn't happen, like the world ends or financial markets collapse, something like that. Eventually, we don't know how long it's going to take, but after so much time, it is going to resolve to one of those scenarios. The stock is either going to go up by 1% or it's going to go down by 1%. There's two outcomes. I'm guessing, don't know what I'm doing. You would expect me to be right about 50% of the time with a large enough sample set. I do this maybe 1,000 tickers in various market conditions. I'd be right about 50% of the time. So I would have a success rate of 50. Let's change that to a percent. I don't want 5,000%. I want 50%. There we go. Success rate of about 50%. Okay, so now let's add some incentive to it. Let's say that if I'm right, then, well, first of all, let's hammer this out. Let's say my number of trades. We wanted 1,000 trades, and let's come down here a little bit. Not my sins. My wins with a 50% success rate over 1,000 trades would be 50. My losses over 1,000 trades with 50% success rate would also be 50, not 50, 500. Let's set this up into a little form though, reactive form. So let's just say wins are going to be equal to number of trades times my success rate. I get the same result, 500. Now my losses are going to be what I didn't get right. So my losses, let's keep this simple. Let's say my losses are equals trades minus how many I got right. I know, what is that? H, not letting me select it. H8, there we go. Trades minus wins. So let's test this. Let's say if I change this to 55. Yep, that is what you'd expect. Let's set it back to 50%. Okay, so we got that hammered out. We know I win so many times, I lose so many times with a given success rate. Now, add some incentive. Let's say I'm risking $1, because if I'm wrong, then I lose $1, but if I'm right, then I gain $1. So that would give us a ratio, a 1-to-1 ratio. So let's say I have a reward to risk ratio of 1. That would be a 1-to-1 reward to risk ratio, because I'm risking $1 If I'm wrong, I lose that dollar. If I win, then I gain a dollar. Okay. If I were to gain $2 and risk $1, that would be a 2-to-1 reward to risk ratio. Okay, so now let's look at what this would look like in terms of gains and losses. The gains would be my wins times, set that equal to wins times my risk times the ratio, which is 1. So that would be $500. My loss would be, let's just change this to total gain and total loss. My total loss, I'm going to set that equal to my losses times my risk, what I risked per trade. Again, $500. All right. And then let's move down here and let's set my net profit to be equal to my total gain minus my total loss. And in this case, I broke even at a zero sum. All right, so now there's 2 things we can do to change this. Let's talk about success rate. I don't so much care about success rate when it comes to trading stocks. What I care about more than what the success rate of a particular strategy is how consistent that success rate is. Do I know the success rate? Because I'll show you here in a minute, it doesn't, with whatever success rate you can have, you can still be profitable. But let's just say, going on with this scenario, let's say I go from knowing nothing about the stock market to knowing something. Maybe I learn about technical analysis, maybe I learn about fundamental analysis, maybe I learn about market trends, bull markets versus bear markets. And so I come up with some sort of a simple strategy that increases my success rate to, say, 55%. What does that look like? Okay. Still with our 1-to-1 risk reward ratio, risking $1 per trade, over 1,000 trades, I made a profit. Okay. It wasn't a huge profit. It was $100, but that's going to depend on how much I risk. Let's say I'm risking $10, then, so on and so forth. 500, that's net profit of $50,000 over the course of however many trades. 1,000 trades. So you can see by increasing my success rate, keeping everything else the same, I can come out with a profit. But, this is also important. Let's say I'm not so good and I only have a 45% success rate. Then I have a net loss of $100. So you can see with a risk-reward ratio or reward to risk ratio of 1, you can lose money in a hurry if you sink below that 50% success rate. Generally, with my trading, I've been trading stocks for several years now. That is one of my primary sources of income is trading stocks. And, I want to talk about success rate. I think that reward to risk ratio is more important than whatever specific success rate you get. And that's going to become obvious in a minute. But what I have generally found is that you can't predict the market, Try as you might. Global war could break out, or a global pandemic could break out, or there are so many unforeseen conditions. A company could have some bad PR, or it could, have a bad earnings report or something like that. And, no matter how good you are at technical analysis or whatever, it is just hard to predict the movement of a stock. I think you can sort of determine a probability of what's going to happen, but you can't really make a prediction. So I focus more on reward to risk ratio, and this is why. So even with me, I'm sure my success rate is got to be slightly better than 50%, but with my trading, I generally assume a success rate of about 50%. Even with that, 50% success rate. Let's say I change this, instead of a 1, I do a 1.5. Okay. See, I did better than increasing my success rate by 5% just by moving my risk-reward ratio. Now you might say that, if I'm shrinking the downward potential, then that's obviously going to result in maybe some more losses. So let me shrink my my success rate rather by 10%. Let's move it down to 40%. So I broke even. So with a reward ratio of 1 to 1.5, our reward to risk ratio of 1.5 to 1, my break even, I only have to be right 40% of the time to break even. Now let's bump this up to 2. With a reward to risk ratio of 2, with a 40% success rate, I now came out with a net profit of $200 over 1,000 trades. And what would my break-even success rate have to be? Let me see. That would actually be somewhere around 33%, between 33 and 34%. So with a 34% success rate, so that means I'm only right 34% of the time. With a 2 to 1 reward to risk ratio, I still turned a profit. It was a small profit, but it was still a profit. My break-even ratio is really, it's like 33.333 repeating, so on and so forth. See, I have a net profit. This is actually a negative number, but it rounds to, Excel rounds it for me. But anyway, that's it. This is not a strategy, but this is, I think, the foundation of being a successful trader and building successful strategies, is just understanding these simple relationships right here. So I've broken it down to a simple set of mathematical relationships. That's all it is. And if you can understand this, then you can be a successful trader. You can make a profit. So anyway, that's it for my very first video on, not my very first channel, but hopefully the channel that I'm actually going to keep up and maintain for a long time. I'm excited to see what happens. I'm excited to see what kind of audience I develop and how this channel evolves over time. So hope you can take something away from this. Hope you found this helpful. Stick around. There's more to come. Peace.